there's a little bit of news out from US jobs, Steve. You were looking at this. What's been going on?
Yeah, so this is private payroll growth. So ADP has come out today and reported the expectation was that there'd be about 153,000 jobs added as per the Dow Jones, but actually it came in a lot stronger than that. It was 235,000 for the month, so quite a bit over. It was 213,000 added in leisure and hospitality. Private and business services grew by 52,000, education and health services 42,000, and then trade, transportation, utilities with a loss of 24,000, natural resources and mining declined by 14,000, and financial activities declined by 12,000. But that still adds up to a pretty hot-looking, an already tight job market, Steve. So was that a shock to you?
It was a surprise to me, I think. I'm not sure I would call it a shock. I think when I think about the jobs number and I think about its significance right now, what I tend to think about is inflation, because realistically, more people in jobs, more people making money, more people spending money, less impact in bringing down inflation. But in fairness to the Federal Reserve, inflation has been coming down in the US. It's been making its way down gradually. There's still quite a way to go yet. But this, to me, indicates, or is just the slightest of indications that your New Year's prediction might go well here. I mean, could it be that we get a soft landing of inflation coming down while the job market remains kind of strong here and things keep moving higher?
That's the plan in my brain. At least that's how. It's strange, isn't it? I know these are lagging indicators because, everything's a lagging indicator really in terms of these kind of metrics, but. That's what I keep seeing. I see all the news that's telling me that there's this huge recession coming, and in my head, from what I've read and putting two and two together, that you should see this huge recession. But one of the key indicators is that this jobs report should be coming in weak or on the estimates, at least, because the estimate is that it would come in fairly soft, but it's just not happening, and that's what's kind of. That's what's kind of strange to me. And I listened to, I saw that the St. Louis Fed came out today. It was James Bullard, and he said that they think they're now at the inflection point where inflation is going to come below the rate of the interest rate. And, we know from listening to Druckenmiller, who is big macro, who says that once the interest rate gets in front of inflation, that's generally a good sign. That's a sign for, the genie back in the bottle. I said box last time for mixed metaphors, but so I think it all looks positive at the moment, and I sort of stand by I don't see anything that that immediately screams to me that we're not going to get this soft landing. But I just think it's one of those things. I think it's on a knife edge still. I don't think there's no clear ground either way. But it's a tip the scales towards my favour rather than the opposite way.
Agree, which is my way. I was predicting a harder landing. I was predicting a recession and making plans for a recession, basically, when I was setting out my predictions for 2023. I'm not quite sure the genie's back in the toothpaste tube just yet, but what I would kind of suggest on this is that this is encouraging stuff, and I viewed this kind of report, I suppose, from the US differently to how I would view it from the UK, where inflation doesn't seem to be coming down just yet. I would see this as more worrying stuff about inflation, jobs going up, inflation going up. How is this kind of tightening process doing anything in this situation? But, I mean, if the Fed can pull this off, or even nearly pull this off, I think that would be kind of nearly a miracle, right? And you'd have to give them a lot of credit for that. Maybe they need some luck along the way, but you're allowed to be lucky, and this is incredibly difficult to try and land.
If they manage this puts Powell and his team in the sort of Volcker sort of levels of sort of Fed notoriety. I know Volcker was allowed to do what he had, he had to do. That's one of the reasons he was so revered. But he was allowed to do what he allowed to do what he had to do essentially. But I think this is. If they manage this is going to be crazy good for. It's incredibly bullish for the strength of the American economy, which is something that we really like. and we utilise a lot of the stocks within it. I was just thinking that the run up to this, I think the market was kind of expecting a weaker jobs report because we had a bit of a rally in a couple of days, really. We've had a pretty good opening to the year, I would say. Today, it looks like the market doesn't really know what to make of it because the stocks have been, my stocks have been down as low as 1% on my main portfolio. Then they climbed back up to about 0.2 down, and now they're dropping back down to 0.8 as I'm looking at it now. My Blitzscalers portfolio, the Capital Incinerator portfolio, that's actually down 3%, but that could happen for any old reason, to be honest. So it's interesting to me. It's really interesting. I don't really know what to make of it, but I think it's going to be one of those things where if you do keep a investing journal, or even if you just take a few notes about what you've learned, every day you learn something, or every week, this is going to be one of those crazy years that you're going to come back to in a few years and think, how on earth did he manage that?
They can pull it off, yeah, and they are a step closer to managing it, in fairness. One thing I guess has been also breaking the news recently is that there are tech layoffs coming. I mean, there's tech layoffs that have been announced. I'm not sure whether they actually happened yet, but tech layoffs that are also on the way. I don't just mean Twitter here. I'm talking about Amazon that announced their kind of layoffs are going to be bigger than expected. Salesforce announced that layoffs are coming, especially in Slack and also across the board, I think, a little bit from their sort of stuff. Do you think this will slow down the kind of rate of jobs added, or...?
That's tricky, isn't it? I think the inflection point for me is when industry starts to cut people. That's what I'm worried about. I'm not so worried about tech layoffs because I think tech has been in this crazy boom for the last probably 10 years where they've almost all of them overhired. And I mean, it was refreshing to see Benioff come out really, really early on and just kind of own that overhiring. He said, straight away, Salesforce is overhired. This isn't even up for debate. Do you know what I mean? Salesforce has gone through a period of making huge acquisitions, growing revenue, from big numbers to bigger numbers at a rapid pace, and it's just hired far too many and people it doesn't need going into a longer sales cycle. So it is only natural that these sort of sales and tech people will unfortunately be let go. But I was looking at, there's a website called layoffs.fyi. Have you ever had a look at that?
I haven't looked at it, I've heard of it.
Yeah, so that tracks about 1,000 tech companies in sort of their top VC / top stock, top American companies kind of ground. And at the moment, there are 154,000 employees laid off in 2022 and a little bit of 2023 today. So that's quite a lot. That's quite a lot of people losing their jobs. But I was interested to see that Amazon were adding to it as well, and I read a couple of reports off the back of it, and the 18,000 people being laid off at Amazon apparently is accretive to the bottom line to the tune of about 3.2 billion, I read, which is a huge amount of money. These are people being paid an awful lot of money, and looking at Amazon, people leaving the tech sector for Amazon, and looking at the sort of people that are leaving Salesforce, it kind of makes me bullish for Salesforce's bottom line as well, because 10,000 people leaving Salesforce, 18,000 people leaving Amazon. I think Salesforce is probably getting rid of higher ranked people than Amazon seems to be getting. So I think I can see why the market thinks it's a bullish sign.
So in general, and this was true of Meta, I suppose last year, I guess we should strictly say, by which I also mean sort of last month or last week, the market has taken news of layoffs fairly well. The idea that companies are going to try and quote-unquote right-size their workforce. And I have some sympathy with the idea that this isn't just owning up to a mistake. We were chatting to Paul about this, and he was kind of wondering why people can't get their workforces the right size in the first place. But I wonder whether the right size for a workforce depends on what's going on. If you think about the last couple of years, we've had very low interest rates, everything in growth mode. It made sense to not keep cash around because what's it going to do? Just appreciate against inflation. You go spend it, go acquire customers, because if you don't, someone else is going to do it. Think about something like Teladoc to an extent, like Salesforce to an extent, like Guidewire Software, one that I've mentioned on this show before. What you want to do in that kind of situation is go and get people signed up onto your platform, especially if you're a Salesforce or Guidewire type thing. Once they're in, it's hard for them to get out again. But if you don't grab them, someone else is going to, and someone else is going to make it hard to switch out of their kind of platform stuff. So I wonder whether there's something to be said that, look, the right thing to do is when it's go time, go all out, And when it's not go time and it's a tighter recessionary thing, people are looking more closely at budgets and the spending's less kind of appropriately there, dial it all back a bit. And that's just the nature of economic cycles and people's kind of jobs and that sort of thing.
Well, it's a common trait in American businesses to get rid of people even after you've had a good year, because American workers, unfortunately, don't have the same kind of protections that we have in the UK. One of the traits of American business that people potentially want to see the end of with this sort of move to a more sort of conscious capitalism sort of kind of environment is that what American business used to do is in a really, really good year, they used to find the worst performing staff and cut them, and then obviously go and look for replacements, and then at the same thing every year. And the idea being eventually you end up with loads and loads of, you know, high achieving, high sales potentially, or high value staff. Obviously, in the UK, you'd really never be able to do that, because you kind of have to have a reason to let people go. And in America, it doesn't. They don't have to give you any reason whatsoever. Just have to give you severance and send you on your way. But that is the sort of the cutthroat way of American business. America, obviously, long famed for being probably the most embracer, or if that's a word, the most capitalist country ever, I would probably say. They don't have an awful lot of like we do. We have a socialist NHS or a socialist system, but they don't have any of that kind of system. They have embraced capitalism the most. So yeah, I'm not shocked to see these kind of figures.
No, you sort of can do that in this country. You just can't employ anybody like that. You can find a bunch of contractors if you're a kind of editorial writing service or something like that, and hire them by sign-ups, and eventually just kind of keep cutting away your bottom end of things. That's a way you can employ something like that. But you're right, it's harder to hire and harder to fire, basically, in this country, because once you've got people in, you are then pretty much required to kind of keep them, which makes it harder to get rid of them. It also makes it something to think about before you sign them up in the first place as employees. I always wonder a little bit what we should think about this as. Remind me, Steve, you own Salesforce or not at the moment?
I do, yep.
Yep, so as Salesforce and Amazon in your case, and Amazon in my case, shareholders, I feel like this jobs report and this kind of news out of these two is probably good for both of us. If we think about in a kind of Amazon perspective for the moment, what do I want? Do I want lower jobs or higher jobs, basically? Do I want more people spending or less people spending? Well, from the perspective of Amazon having kind of overrun a bit or something like that, and inflation needing to come down, I probably want fewer people spending, but since the place they're likely to or lower spending in general is likely to be a bad thing for Amazon, I suspect I probably want a strongish jobs report. So Amazon itself right-sizing its workforce, while the workforce in general and broadly across the US looking quite strong, I think is probably quite a nice best of both worlds for us, just for this little bit of time anyway.
Yeah, I think for both of us, it's a bottom line story. I think that's why, at least in the short term, you should be bullish about these things. Amazon and Salesforce are two companies, and I suppose Meta to that kind of degree, that have paid quite a lot out in stock-based compensation, and, you know, are either making moves to or have made moves to in the past, try and mitigate that by, you know, essentially burning the cash into buying back stock, you know, which is not that great when you're still handing it out like sweets. And all of these are, you know, all of these things, there are a lot of people leaving these businesses. 11,000 at Meta, 18,000 at Amazon. I think it's 8,000 or 10,000 at Salesforce, but another 10% announced today as well at the Slack headcount. These are all people that will be earning stock-based compensation. These are all people that will now not be earning stock-based compensation. So I really hate to always just wear the investor hat only, but on this occasion, wearing the investor hat, I think these are just bullish things for us, really.
Yeah, in the case of Meta, you and I were on JKR Investing's channel about a week and a half ago, not quite sure when this show is actually going out, but around a week and a half ago we were talking about Meta, or I was, and I was saying there's layoffs coming in Meta. The market seems to have taken them quite well, probably because they're spending quite a lot of money at the moment, flinging cash into this metaverse thing if they're right-sizing that. I don't know that they are. I know that they're letting people go. I'm hoping they're doing it out of a kind of unprofitable metaverse end of things, and that this is going to be positive for stock-based comp and so on. I haven't actually seen any details to support that idea yet, that people either know better than me or are assuming that that's kind of happening. But hopefully this should be good from all of these across the kind of board. I don't know as I've heard anything out of Alphabet yet on layoffs. Pichai was talking as though talent is he wasn't talking as though, he was saying talent is a very important resource to Alphabet. They will do everything they can to hang on to it. I think he's probably correct about that. But there's only so much of it you can justify keeping around. And I suspect if you asked Andy Jassy, if you asked Mark Benioff, they would say talent's a very important resource. That's why we're constantly flinging the stock-based comp out the window all over the place. But we need to get ourselves into the right kind of shape for the environment that we find ourselves in, and that will be true at Alphabet as well as it will at Amazon.
Yeah, the only thing I've heard out of Google CEO is that they're basically stopping hiring for now. There's a temporary freeze while they assess the situation. So that in itself for Google is a right sizing of its hiring, because they hire at such a rapid pace. For them to not start hiring with the amount of projects that they do have on is probably somewhat of a right sizing. But so long as they keep introducing projects. But I guess to take the opposite side of that argument, I guess Zuckerberg and Benioff and Jassy would tell you, look, we're not getting rid of the best people. You know what I mean? We're not. You wouldn't go down the list of people and choose to get rid of the guy who's performing the absolute best, would you? So maybe this is just, as cruel as it sounds in my head, just trimming the fat a little bit. Yep.
At times like this, they kind of come under pressure a little bit towards thinking about exactly what are they producing. It's the same with everyone else, I guess. Meta, Alphabet, so on. Think about advertising budgets, and they're coming under pressure to justify their existence.
Well, you can measure this as well, though, as an investor. You can measure this as revenue per head. So if you take the amount of revenue and you take the head count, you can divide one by the other, and you will get a metric. You can then compare that metric over time, and you will see whether the company is actually generating more revenue per head count. So you would generally not want that number to be going down. You want that number to be going up. That is one of the things as an investor that you can do, and it's one of those metrics that's useful to keep your eye on. Actually, wondering how that would do if we ran that on Google, Steve. That might be an interesting exercise one day.
That might be an interesting exercise. Let's keep that one in the pipeline for maybe next week, because it's not the start of earnings until next Friday, from what I think of it, and we record these usually on either a Wednesday or a Thursday. So that might be one that we look to have a bit of a look into, I guess.